Good afternoon, guys and gals. Today we are going to go over the continuation chart pattern, and this video is overdue, especially for me. I observe and see continuation chart patterns developed enough times that I should know where my entry point is, and we are gonna sort of kind of go into that and spot a continuation chart pattern and find our entries. Another thing I want to mention on here is that I'm still focusing on options contracts, and I want to go into that, sort of kind of explain on some of the reasons why I want to go into option market and trade options instead of trading stocks, right? The first reason is that I do not have enough funds to buy Tesla right off the bat, 100 shares. I do see a lot of people trading 1,000 shares here and there, and man, they have a lot of money because I don't have that much. And option gives me the chance to trade the name and still bank a lot of money that way, right? So anyway, let's go ahead and get into the name and find out support real quick, right? That's what I usually do, is find the support on a 20-day chart. 780. 800 is another support level there where we can come in and pay for it a little higher, but then not too much higher than the support level, right? So if we were taking a look at this chart here, let's just say we're not going to look at analyze this over here. We'll just kind of analyze the lowest one right here and sort of kind of find our entry point, right? The day, the high of that day is 842, coming down to 780, 780, bouncing, selling, bouncing, selling. This sell here and this trade here is sort of kind of weak. Nobody wants to hold the stock overnight, right? So it sort of kind of cued me into thinking, hey, if it's trading kind of weak, we can actually kind of expect another dip here below that level of the low, right? And even if it doesn't dip below that, the next support level, which is 793, determined previously on over here, we could actually come in there, right? And even though we miss out on 780 here, next day, if it's not dipping any below that, we're not. It's probably likely not gonna go 850 right off the bat, right? So that's kind of mentality there, where I don't create a position when I see it trading sort of kind of weak like that, right? And where does the continuation chart pattern start developing? On the second day, right? On the day that we expect it to drop a little lower, right? So over here, 780, trading kind of weak. So we sort of kind of, hey, I want to wait for another day, see if it dips lower, then I can jump in, right? But take a closer look here. It doesn't dip below that, right? So the continuation chart pattern actually starts right over here, right? This is the way I understand how it works, right? First of all, short sellers are up here. They are borrowing the shares and sell the stock, take profit right off the bat, but they do have the need to come in here and buy the stocks and give it back, and that's how they make money. Same thing with put option buyers, right? They are betting on the stock coming down, and when it's low enough, they need to sell the contracts to make it worth it, right? To make them money that way. And that's how they create a buying pressure coming up. That's where you are seeing a lot of reversals, bottom reversals, right? Coming up and still continue to sell, and then coming up a little higher, but then overall traded pretty weak at the end of the day. Nobody wants to hold this name, right? So short sellers up here, if they are betting on the next day that's going to go down a little further where they can bank them more money, they are already expecting it to go a little low, right? Just like us too, we sort of expect it to go a little lower than this right here, right? But if it doesn't happen, it creates another buying pressure right off the bat wherever the low of the day is. They need to come in and buy it, right? If they miss out on that right there, short sellers, they need to come in here. They don't want to be waiting for it to bounce back to that level or further, because put option or short sellers, they face a sort of kind of more risky trade if it doesn't go their way, right? And whenever I buy puts or short the stock, I don't even hold for that day. but some people do, right? And they create another buying pressure back here. So this is where the start of the continuation chart pattern develops, and we need to be in here. We need to be in here when it's low enough, right? And when it's closer to that support level of 780, and the previous one, another one is 795 right there. We already determined that, right? So if we miss the one out on this one, we can actually come in here and pay for it a little higher, but that's okay. It's safer that way too, right? Okay, so 3 o'clock coming up, 6 o'clock, sell, coming up a little bit. Sometimes when we reach an ideal support level, it's just going to shoot up like this throughout the day, and held out here for a little bit. But you know, people are already expecting, since the previous trading session was kind of weak, so we sort of kind of expecting another dip below that, right? Didn't happen, so we need to come in here and determine, hey, where is our entry point? If it's dipping not lower than the previous day low, we can actually put our money here and bet on continuation chart pattern, right? Remember, that's where the continuation chart pattern starts, and this is the way I interpret how continuation chart pattern goes. But you know, each trader interprets it differently, right? That's how I understand it. And the mechanics of short sellers coming in, you know, missing out on previous day's low already, and they do have a need to come in here too. So that's where all the buying pressure comes in, and we do need to come in here because we missed the previous day's low already. But it's risky for me to come in at low and still seeing sort of kind of trading kind of weak like that. It's sort of kind of risky. So we can come in here, seeing the first coming up, dip, that's on an incline angle, trading up, trending up, right? We want to make our entry here or here, right? As long as we know the momentum is going up, right? Since we are betting on a continuation chart pattern and we missed out the low previously already, this is our next lowest level we can get in, right? And still not too bad. It's not too far away from 780, which is 790 over here, $15 more than what we could be paying for, right? And we just sort of kind of hold out and take a look at the resistance levels previously, right? Previously, the resistance level is 832, and we are already bouncing up on that one day, right? And then we're going to try for a next day of 846, and actually next day bounce up, sell, but continue to bounce up 880, right? We're just taking a look at the price action. We're not we do need to be looking at the indices and where the market is going overall, but we are mainly looking at the price action, right? And didn't quite reach 880 or 900, sell, right? And in my mentality is that I missed out on over here already. Look at the amount of money that I could be potentially banking. Take a look at this. See the correlation between the entry points here. If I got in here and I paid $10, which is one contract, I paid $1,000, right? It peaked to 19, right? Almost double the money on that first day, right? And that's the contracts. And the next day it peaked to 42. If I got out on the first peak here, I would have been still in the money already. 1,000 turns into $3,000. That's trading options on a support level, right? And a lot of people say, hey, trading option is gambling. To me, it is not. It depends on how you interpret it. Depends on how you trade it, how you time it, how you spot the entry, and how you manage your risk and reward, right? So over here, coming down, I actually paid, and I chased this stock kind of high right over here, and I paid what? 1040, right? 1060 actually, 1060. So I paid 1,060. But take a look at the expiration date on here. You know, the option was worth a little less, even though the price was a little higher than what I paid for, right? Over here, got down to 840, and then take a look at this dip. Even though it's sort of kind of 840, the strike was 845. It was only worth $325, right? I did make a mistake and exit out at 840, and I'm okay with that. And you know, rather take a loss than to risk my account blowing $1,000 worth of investment, right? Anyway, I also failed to actually hold out for a continuation chart pattern. I know on the other video I said, hey, if this low of that day doesn't dip below the 833 previous day's low, then we can actually bet on it going on a continuation chart pattern. And this one is expiration, and people are betting it up already. And take a look at us now. Take a look at us now. Continuation chart pattern developed on that day, and today early in the morning, 6 o'clock, people are selling off to 840, but not quite 839, right? Still higher than the previous day's low. So then we are continuing on a continuation chart pattern here. 8 says 76 and sell, trading sort of kind of low, below that middle of the VWAP line, but it's not that low, right? Take a look at us now. There might be a sell-off tomorrow. There might be a continuation, coming up tomorrow. We don't know, but we know for sure that our entry point would be an ideal over here. Once we spot a continuation chart pattern, that's when we need to come in. Look at what we missed out on, though, right? Well, this is next expiration. This one has expired already, so we'll go into Amazon and take a look at the expiration on Amazon and what we missed out on, right? So let's go ahead and take a look at Amazon real quick, right? And expiration was, the expiration was on the 5th last week, 3,300, right? If we take a look at over here, the support level when after that earning was like this right here, 3,250, and if we buy contracts for 3,300, if we take a look at it over here, coming down, first day don't create a position here, right? And the end of the day low. Coming here, we can actually create a position down here, right here, right? If we draw a line, sort of kind of a greater angle than what I would imagine, but hey, still we spot our entry point. We enter right here, or right here, right? 3,300, right? That's betting on the expiration of this day right here. And take a look at it. Take a look at it. Where is the continuation chart pattern to start developed, right? Over here, the low of that day doesn't dip below that 3,280, then we can bet on continuation chart pattern, right? And it's actually breaking out on that day. It was breaking out on that day. So if we take a look at this right here and correlate that with our price entry here, it would have been over here, we would have paid for $1850, $1950, so $2,000, right, for one contract. And we could have made money right off the bat for 31, right? Got up to this peak, 31. And if we held out for next day, which is over here, and still create another entry point over here, right? We could pay a little bit less because it was Friday and contract was worth a little less than Thursday, right? And if we spot a continuation chart pattern, we can actually come in here and take advantage of that cheap price, right? And still betting it going up. We see all this MACD rolling up. MACD's rolling up and all this. Same thing happening with Tesla, right? TTM squeeze coming up, and breakout right here. We could pay 14, right? Or if we held out for 19. We could have see a little bit of downfall, right? And then still breaking out to 75. Take a look at this, right? So from here, you say 3,330 breaking out to 3,375, only $75. And take a look at the difference of the contracts. 21, right? Lowest one is 14, coming all the way to 75. Do you know what I'm saying? If you know the breakout, if you know the continuation chart pattern still breaking out, you're paying only what, $2,000. Say if you paid over here, sort of kind of high, $2,000, you still would have banked 7,500, right? If you held out this one, and if you exit on the first peak right here, could have been right over here, right? Still make money. That's the way I see it, and that's how I would be finding my entry point from now on.